Hey everyone, this is Tim Dial with Nexa Mortgage, and just wanted to put this short video together to give another sort of a market update. There's a lot going on right now in the market. We just had an election. Additionally, there's CPI numbers and stuff like that coming out. Inflation, they're going to show the CPI number tomorrow is going to show that inflation has actually gone the wrong direction, and that's going to really hurt the market to some degree. But we know that there are a lot of factors for this, and inflation really isn't going the wrong direction. It's because of replacement numbers and the numbers being so low at the end of the year last year. So I don't want to get into all that and all the technicals of it, but just know that it's a little bit wrong in that regard. And by January, we'll see much better inflation numbers than what we're seeing right now because the replacement numbers in January are going to be a big deal. There was a high number last January. So as a result, inflation will look a lot better in January than it will in November or December. But anyway, as a result of all this going on with the election just happening, and there's all this uncertainty about tariffs and stuff, and then additionally, these CPI numbers expecting to be bad, it's creating kind of a rough market right now as far as interest rates going up. But here's the sort of the silver lining in that there are still sellers wanting to sell their home. And a lot of these homes are sitting for longer. So for those buyers who are out there wanting to purchase a home, it actually increases the opportunity to buy a home and to get a really good deal on it. Sellers are much more willing to negotiate, to pay closing costs, all that kind of stuff as a result of how difficult the market is right now for them to sell. So the nice thing is that you can buy now, get those really good deals on a home because they're willing to pay closing costs and even reduce their price some. And then in the future, you'll be able to refinance it as the rates come down, which we know they're going to do. The Fed's lowered the Fed funds rate by 50 basis points in September, another 25 basis points in November. They're expected to do another 25 basis points in December, and then so as of January, when we see those much better numbers, we're going to see those rates really start to come down, I think. And then probably by the end of next year, rates will be like a full percent lower, maybe even 1.5% lower. And those people who are getting really good deals on homes right now, they'll be able to refinance to a much better rate by the end of the year next year. That's what we're kind of expecting. So anyway, I wanted to get into this a little bit, show you a little bit about the numbers very quickly. And this won't take long at all, but I always like to go through this a little bit. So if you're seeing my screen here, you see this chart, and you can see what the rates have kind of done. This is the 30-year bond, and when the 30-year bond goes down, rates are going up, and so if you see here, the rates got a lot better around September, mid-September or so, and then they've gone up as this bond has gone down. And today was a rough day, 45 basis point difference right now, as you can see here. And then by the same token, the 10-year moves in the same direction as rates. So if you're looking at the 10-year, rates went down mid-September, and now they've been going up, up, up. And so we're up to here. But at the same time, when you look at that activity, houses are taking longer to sell. That's other data that has come out recently. And as houses take longer to sell and houses remain on the market for a longer period of time, the sellers become more willing to negotiate, and then the buyers get a better deal on the house. And so you get kind of the best of both worlds. You get the better price and closing costs paid for and things like that. And then in addition, a year later, you're able to refinance to a better rate and lower your payment by, $300 to $500. So it's a great time to buy, even though a lot of people are like, oh gosh, because the rates are where they are, I don't know if I want to buy now or if I want to wait. The other part of this is that once rates do start to go down next year, you're going to see the prices start to go up because the demand for housing is going to go up a lot as more buyers enter the market. When that demand goes up, the prices will go up, and you'll end up paying $40,000 or $50,000 more for the same house next year. Instead of being able to buy right now and then benefiting from those equity gains as those prices go up next year. The house you buy today will be worth 40 or 50,000 more in a year in a lot of cases. So you don't want to miss out on those equity opportunities whenever the rates do go down and the prices start to go up rapidly. So anyway, that's pretty much what I wanted to cover here. See here, it's actually gone up just a little bit more on the 30-year to 49 basis points. That's one of the worst days we've seen in a while. But like I said, that's creating more opportunity with sellers right now, and great time to buy and get a good deal on a house. Just wanted to cover that really quickly. If you do have any questions or anything, feel free to give me a call or send me an email. There's my contact information up here. 615-703-8880 is my office number. My mobile number is 615-995-2615. And if I don't talk to you before the holidays, have a great Thanksgiving. And yeah, just let me know your thoughts, or if you have any other questions or anything, I'm always here to help. Thanks, and have a great rest of your day. Bye.